Just give us a snapshot quickly of what the valuation multiple is on the Nikkei at the moment.
Sure, thanks, Belford. So right now, Nikkei index, which consists from mega caps and large caps of Japanese companies, is trading at 22 times forward earnings, which is at a 10-year high. However, if you look at the broader index, for example, like the Topic index, it's trading about, give or take, 16 times forward earnings, which is still about a median of the previous 10 years. Japan is one of the very few markets which has a positive earnings momentum and also a positive revision that is still trading within the 10-year range. Other markets, such as the U.S. and Indian markets, are trading at 10-year highs.
But that's really interesting. I mean, those valuation multiples are steeper than I thought you were going to say. So I guess you just touched on it there, but talk us through the attraction of buying stocks at that price. Is Japan about to grow at 6% GDP per year?
No, I think there's still a big perception gap amongst global investors. When we talk about investing in ASML, for example, do we worry about Dutch domestic economy? But some or the other, when global investors think about Japan and Tokyo Electron, they worry about Japan's anemic GDP growth. But at the end of the day, as active investors or Japanese equity market investors, we invest in Japan corporate profit growth, which has been extremely robust over the past decade. And going forward, it has been and it will benefit from global manufacturing cycles. And on top of that, there's ample upside with regards to increased share buybacks and dividends.
Talk me through that, the sort of sense of shareholder returns and the priority that management gives to shareholders. Is there a lot of dividend payouts at the moment? What are the yields on some of the key names you own?
So currently, the Japan market on average is the dividend yield is about 2%, and buyback last year was record high at $65 billion, which buyback yield is about somewhere between 1 to 1.5%. The important thing here is corporate Japan is sitting on $1 trillion of cash on balance sheet. More than 40% of the Japan-listed companies are net cash. So unlike the U.S. companies, which is borrowing money and buying back shares, actually increasing buybacks and dividends for Japanese companies is not to decline the ROE, because the cash flow accumulation has been much faster than the deployment itself.
That's really interesting. And then just talk to me about what your assessment of what the Bank of Japan has been doing over the last 6 months is, and whether it's the right move. Like, obviously, coming out of zero interest rate policy, have they come out of that a bit slower than you might have expected, or are you ultimately content with their actions?
Yes, so I think the BOJ actions, basically raising rates, moving out of the negative interest rate policy, is an important milestone to actually see real wage growth in Japan happen, which is critical for domestic consumption. However, at the same time, Governor Ueda has stated that BOJ will continue to be accommodative in its stance on a relative basis compared to other central banks, and that's exactly what we need to see for the Japanese equity market, we think.